You know, on a Friday morning, it's nice to see the Nasdaq doing well, up nearly 90 points. The rally in tech continues, I guess. The Dow is off a mere 8 points. Mark Mahaney is with us today, as usual on a Friday. All right, Mark, I want to talk about your two top picks. First, the number one pick, Amazon. Currently at, where is it now? Amazon's at 227, and you think it's going to 335. All right, Mark, make your case.
All right. The backdrop against all this, Stu, is that we've had 3 years now of a really solid bull market in tech stocks. One stock really hasn't participated in that, and that's Amazon. It's been a bit of a dog stock. It's up mid-single-digit percent year to date, in which, an environment where stocks are up, the leading tech stocks have been up, the market's up 20%, and some of these other names that I've liked in the past still like, but Google or Nvidia are up dramatically more than that. So this is a little bit of a reversion to the mean play. But there's also the pitch on Amazon is you've got this cloud business I think is going to show you accelerating revenue growth next year. I think the retail business could actually show you that too. I think some of this U.S. stimulus is going to help retailers, discretionary retailers like Amazon. Their ads business, if the retail business inflects up, so will the ads business. And then you got a new business being launched, literally. And this is this competitor to Starlink, and it's called Project Leo. It used to be called Project Kuiper, satellite internet broadband access. So I kind of like the core business inflecting up. I think profits, I think margins are going to gap up this year. I think valuation's very attractive here. And I think it's kind of an overlooked AI winner. So that's the pitch on Amazon. 335 is my price target. I'm sticking with it.
Okay. Tough guy. What about Expedia? Your target price, right now it's at 285, and your target price is 350. Again, make your case.
This is a way out of consensus call. Very few people in the sector I cover would recommend an Expedia. It's been around forever. It's extremely well known. It doesn't have as much international exposure as its biggest competitor, Booking.com. But you've got new management and relatively inexpensive stock trading at around 17 times earnings, generates lots of free cash flow. They buy back stock. They pay a dividend. And you're at a real kind of management upgrade point in the history of the stock. New CEO came in about a year and a half, new CFO about a year ago. And you're starting to see accelerating business, accelerating revenue trends and rising profitability at their core Expedia brand. Some of the other assets you may know, Hotels.com, Vrbo, and I think that's just a really nice setup. In fact, what you've seen is this convergence of growth rates amongst the biggest travel companies. But this is the name that's been converging up. And so I think there's more room for the multiple to also converge up. So that's why I like Expedia here, 350 price target. I'm going to stick with this too.
Okay. Mark, you have excited us all. Why don't you have a great weekend, and we'll see you again real soon. And if I don't see you, Merry Christmas.
Merry Christmas.
Yes, sir.
Merry Christmas.